So it's Wednesday and we officially got another day in the books. We got 2 more days left on the market this week. And so I wanted to come over here and pretty much show you guys what I was looking at with my students today. And also we're preparing for episode 6 of 100, turning 100 into $1,000. Okay. I have a play that we looked at a couple, but together we were looking at Robinhood. There were some things that we were going over the chart. Students were asking a few questions about it. They made some damn good points on what we were looking at. And I want to show you guys some of the things that I kind of brought up that we're going to be watching for a long term and for a shorter term play with this one. Okay, so I want to take you guys to the charts and I want to show you the full out thing of what we're looking at. I need to clear the chart out so I can show you guys exactly how we were kind of pinpointing things. So let's go over here and check it out. Change of plans. Okay, so the screen record, as usual, is acting up. So we're going to make this thing a lesson on the tablet. Okay, so this is the first thing that we looked at. Okay, so I want to kind of point out to my students that Robinhood is making its way back up to that 84.71. Okay, that 84.71 is their IPO high or their all-time high. Okay, Robinhood went public back in August of 2021, and their stock went from about $30 on up to about $84, and then that shit crashed. Literally, it went from that high 84 all the way down to a couple of dollars, $4, $5, $6, $7. That it just stayed for a very long time over the course of a couple of years, and it's finally starting to make its way back up. So there were a couple of things, like my students and I have been trading this, okay? And I've been telling them, hey, we are going to have to really start watching as Robinhood gets higher and higher. I said, once it gets back to those 60s, high possibility it could be making its way back to those 80s where it went, the higher up that it went when it went public back in 2021. And the bears could very well be waiting to push this thing down once it get up there. Okay, so the first thing is this. Okay, you guys see where I have this this $49 level at, this little red one right here. This was from a play that we actually did together. Okay, right up in here. Now I said once we break that, when we break that 49, we could be making our way up, all right, to that $62 level right up in here. We actually got into a play that we held and we wrote it up to that $62 level. Now, some of us stayed, some of us didn't. Some of them did not during the forward thing because, as you guys can see, we had a little bit of some pullback here. But nevertheless, it was a good play. And so we wrote it up there. And I said, once that breaks right there. Now, there was a bit of a fake out right here. Okay, we had a little resistance right up in this area. Now, once it broke that, I said we can begin to push up. We got 62, we got 65, we got that $70 level. And I said, once we begin to break some of these levels, we could very well be going up to that IPO high that they have up there at that top. Now, this is the game plan. There's a couple of game plans. Some students came with some valid points. Now, let me show you guys something about when you see something like this. This is right here is what you would call a trend line, okay? This is, we pushed up here and it pushed back to that same line. We pushed up again, we back at that same line. We pushed up again, we're back there again. Pushed up and it just does the same thing, and this is where we currently are. Now, there's a possibility it will continue to stay on this trend. Now, unless it breaks this trend, come down here, it could be coming back to that $62, back to that $70 level, and back to that $62 level, and it could potentially go there and possibly bounce up again. But as of right now, it's on a uptrend. It's making higher highs and higher lows. Okay, so if we're here and it begins to push up again, okay, so we have here, it comes down, it pushes up again. And this could be where it finally breaks the trend line, because if the bears are waiting there to smack it back down, just like they did back in 2021, it could break that trend line and begin to make its way back to these lower areas, possibly. But if it decides, okay, it gets up here to that 84, it comes back down to, let's just say 80. comes back down to 70, it bounces, hit up here again, come back down, hit up here again, kind of have some resistance there, come back down again, and then finally breaks through that $84 level. It's very well possible. It may not shoot right through the $84 level. It may be some turbulence trying to get there, and it's retesting old support level, and it's breaking those support levels potentially, and then pushing back up. So there's a way to play this thing, but once it breaks that $84, I most definitely would not be interested in any calls past this point. Why? If something gets back above an all-time high, there's no data at the top. There's nothing for us to determine where this thing could be going, where the bulls may be trying to take it. So it's just speculation above that point. So I would wait until enough data is up there to let me know, okay, this is a new resistance level up here at the top. This is some heavy rejection. The bears are probably going to be here waiting. There's none of that at the top. So once it breaks past that point, for me, calls are off the table. Okay, so let's take all of this off. Now, let's look at what one of my students sent me. And I understand why he saw it this way, but technically, okay, so first off, he saw this as a rising wedge. Now, this is one that I teach about, I actually use quite often. When it comes to a rising wedge, I hate when it's do that. When it comes to a rising wedge, okay, it's like a triangle. It's like this, and it's like this, okay? And what happens is the price is pushing up, down, up, down, up, down, and it's just getting smaller and smaller and smaller. And what happens, the steam is running out, and then it breaks that trend line and it starts pushing down. But what you want to be sure that your lines are fully connecting. You guys see this? Now, if we make this as a triangle, it kind of too much space up in here. It's not fully connecting. It's possible to look at this as a rising wedge, okay? You probably have to kind of switch up those time frames a little bit that connects those lines on those candles, okay? Now, one of the other things that I told him to look at this as is a ascending channel, okay, or ascending rectangle, whichever helps you remember, okay? You guys see that? It's not triangle, it's just a line up. It's more of a rectangle. Pushing up, okay? And we begin to continue to push up to the $84 level with the possibility of breaking this channel. Go back. With the possibility of breaking that channel and pushing out once we get to that $84 level. So it's kind of like stairs, okay? It's just making higher highs and it making higher lows, okay? It's continue to rise. That's pretty much what we are working with as of now with this, with Hood, okay? And this is actually where we are at this very moment, right up in here. So it's possible that it's making its way back to that 84, and then we could potentially look at puts here to ride it back down, but we want to see what the reaction is like at that $84 level. Now, once earnings come up on July 30th, okay, that is where we could potentially see it finally break through the $84 level, possibly. All right, I'm not saying play, gamble, or make any decisions up there just based on their earnings, but that is probably where we can expect to see it. All right, so I wanted to bring that one to your attention because it could very well be $100 to $1,000 play, depending on how many contracts you get, but strike prices you're looking at, and of course when you enter the position. So keep Hood on your radar. It's pushing back up there. It has not been up there in years. I'm talking about 2021. But also, once it gets there, okay, just be careful because the bears might be waiting to push it back down. Or once it does break up here, we don't know what the hell is going to happen, okay? Because we don't know how high up they're going to push it. We don't know if they're going to try to run that thing up to 90, run it to 100. We don't know. It's a whole lot of speculation that's going to take place up there. Or the bears are just going to come in very strong and just push it back down. So keep Hood on your radar. It could definitely be a very, very good play, especially if you're looking to hold it for a longer period of time, or maybe looking for different ways to kind of play it like you ride it up, get out at that $80, $84 level before shit hits the fan up there, or you just kind of wait it out to kind of see what happens over the next few days, next few weeks. With it kind of playing between that 74, 75, and that $84 level, and just see how the reaction is moving. Also, see if the channel is still holding. Okay, is it breaking through and it's deciding wants to come down, or is it still pushing up? What is taking place? So that is just something I wanted to kind of go over. If you decide to get into the play, let me know. Let me know how it goes, and let me know why you entered it, because there's a lot of things here that we can look at and take into consideration. So what was your reason for entering the play if you decide to? If you see something on the charts, then feel free to share. So that was it. That was that. That's the play that I'm looking at on the series account, as well as personal account, as well as with my students. And so if you decide, like I said, to get into the play, let me know. Go look at Robinhood charts for yourself. Make your own damn decision and do your own damn due diligence. Okay. I do believe this could be $100 to $1,000 play. Like I said, I keep it modest. Okay, because not everybody, I don't always recommend people to go into it in 5, 10, 15 contracts when you're just starting. Okay, but if that's something you feel comfortable with, hey, do you? It's your playground. All right, but $100 to $1,000, just looking at whatever strike price you select, looking at, of course, how long you decide to hold it. Just a number of things, your entry, where you exit, all of that stuff. Okay, so plan your play accordingly if you decide. Yeah, so Robinhood has their earnings coming up, which is on my birthday, but not coming up. Coming up, we still got time. It's coming up July 30th. In case if you ever bought anything from me, trading wise, you may notice the company's name is July 30th. Yeah. Anyway, so Robinhood, like I said, is hitting their all time high, that IPO high that they had up there, and when it got back over 40, like some time, like when it started hitting that 40 again, I was like, okay, one or two things could get it there. It could either just make its way slowly back up there, or their earnings could possibly finally push it back up there and let it break that all-time high and get above that $84 level. Okay, and so people get excited when those all-time highs get broken, or an IPO high gets broken, and it starts rallying like crazy. Okay, so don't get faked out. Don't get FOMO. Don't get FOMO. React to what you see, yes, but don't go in blinded and just entering because you see a rally taking place. Because, like I said, speculation is at the top. We don't know what's going to happen up there. We have no levels to go by up there. And so you can easily try to hop in real quick, or say, okay, I'm finna jump in. It's rallying and then push past 84. Now it's 90. Now it's 92. The minute you get into that damn play, that shit starts coming down. Okay, people, it happens. Okay, it happens. It's one of the biggest mistakes that we make in trading, or even just investing in general, is that we see a rally taking place. We get scared thinking this thing, and we continue to push up. And the minute we make the decision to go in without a plan, blindsided, and just going in just strictly off FOMO, that thing go the opposite direction every single time. Been there, done that. Okay, this is a mistake we may find ourselves still making from time to time, no matter how long you've been trading. But it's definitely a avoidable mistake. All right, so if you have not already, make sure you get your trading journal down below in the comments, in the description section, and you'll find the link down there, as well as getting your little black book of candlestick patterns down there below as well, where you can actually see the wedge that we talked about in this series. You've watched any other video, you've probably seen I've talked about the wedge quite often. I think that's probably why one of my students brought that up, was like, is this a wedge? I understand why he see it as that. But one of the most important things when it comes to drawing them lines out, Picasso in that chart, is you want to make sure that these trend lines are connecting with the candle. Don't try to force a pattern, because you may see it. I understand why. If you're just looking at it, you may see it could be wedging. And it's a possibility that kind of where this thing is going, that's the direction it's going. So don't try to force a setup. Connect, make sure your candles are connecting with the trend lines, and you are creating accurate setups or accurate patterns, and you're not, just hoping that that's what it is and not fully going with it. I will see you guys in the next one. This will more than likely be our sixth play for the $100 to $1,000 series. And ironically, like I said, this could be $100 to $1,000 play, all depending on you. So I will see you guys in the next one, and I hope this video leads you to a damn good one.